If you're thinking of topping up into CPF special account, Medisave or SRS for tax relief, this video is for you. Of course, all these three ideas can all potentially get you tax relief, but again, subjected to the rules which I'll explain in this video. But let me show you firstly my own tax statement, how about that? This is my year of assessment 2023. You would see there at the bottom, I have SRS, which is Supplementary Retirement Scheme, 15,300 of tax relief. Then right at the very bottom, CPF cash top-up of $8,000. Do know again, this CPF cash top-up can be either to special account or Medisave. The limit is $8,000 shared across these two accounts. So stay right to the very end, I'll show you some bonus comments for my own statement. Now, ideally, if you can afford, top up to both because that's where you get maximum tax relief, correct? That's what I did for financial year 2023. But if budget doesn't allow you, which should you prioritize? Maybe you don't want to lock up too much cash in tax relief. Which should you choose? And I'll actually show you why. Hi guys, welcome back. This entire discussion was inspired by a comment on my Telegram channel, so do check it out in the comment sections below. And it reads, I'm planning to set aside $1,000 each month for tax savings. Should I do $8,000 into special account because that's the limit? And the remaining $4,000 into SRS? Or should I do everything into SRS? I helped him do a quick poll to find out what generally people prefer. And the result reads like this. 59%, which is actually the majority, voted to pump it into special account first because of 4% guaranteed. In the green tick over there, I voted to top up the SRS first simply because I like to invest. And for CPF special account, the investment options are just very, very limited. Now, since the majority voted for CPF cash top-up for tax relief, let me show you some terms and conditions. Now, this is a quick statement to understand certain CPF rules. What we can see is for special account, this amount is above the full retirement sum already. For 2023, the full retirement sum is $198,800. For 2024, the full retirement sum is $205,800, $7,000 more. So in this instance, the special account amount saved up already is already more than the full retirement sum, which means also in this situation, topping up to special account is not allowed. And such situations are actually fairly common for someone who's above the age of 45 and has been full-time employed for the last 20 years. But wait, there's still a solution for tax relief. What we can see on the right-hand side, Medisave account, that is an avenue to do cash top-ups to get tax relief. For Medisave account, there's this term Basic Healthcare Sum, BHS, whereby anything above that will start to flow to a special account and then subsequently to ordinary account. And if you have below that amount, which is for 2023, $68,500, you can actually do a cash top-up. So let's use this example. Medisave account right now is $66,000. That means the person can actually top up $2,500 to get tax relief and 4% interest. Now, just in case you didn't know, Medisave account and special account both attracts 4% rate of return. And if all things are equal, generally I always suggest to top up to Medisave first, then special account, because Medisave can be used for insurance, Medisave can be used for healthcare needs. So far, if you've learned something already, help me smash the like button so we can reach bigger audiences together and do any contribution by year end, 31st December. But don't leave it to the last minute just in case you forget or the system that day has crashed. Do it right now, today. With that cleared, let's now move on to SRS, Supplementary Retirement Scheme. And I'll share with you why I should prefer topping that up first, then contributing to CPF and get that 4% guaranteed return. In a nutshell, SRS contributions are not allowed to be withdrawn before the age of 62 or 63, depending on when you actually created your own SRS account. If you haven't created, from now on onwards, it's all from the age of 63 onwards. But there's a catch also. If you were to require to take out monies from your SRS account, it is actually still possible. You heard it right, it's actually still possible. This table shows you what happens if you withdraw before the prescribed retirement age. At the bottom right hand side, you'll see a penalty of 5%. That means if you were to withdraw any amounts out, you have to pay a 5% penalty. Not just that, the amounts that you withdrawn out will be 100% added to your chargeable income for tax calculation. So in this instance, you'll see that the person withdraw $40,000 out and had to pay a 5% penalty worth $2,000. This $40,000 would also need to be subjected to tax, which will cost that person a couple of $100. But hey, you actually realize that this person can still draw $40,000, correct? What if this $40,000 is really needed for emergency and stuff? What if the person is totally unemployed? This $40,000 withdrawn out can come in really handy. So in my opinion, SRS monies has certain use in emergencies. Maybe don't see it as emergency cash, but do know so this flexibility could really save the day when unemployment comes in and you can't find work. These monies can still be touched. Maybe you're in business and having access to potential cash could really save your day. So these are things to consider, and this is also a key reason why I much prefer SRS than CPF top-ups for tax relief. I also want to quickly highlight, if you're a foreigner or PR, any withdrawals on SRS will be subjected differently because there may be a withholding tax of the highest tier 24% in addition to the 5% penalty for premature withdrawals. And I'll move on next to why I actually prefer SRS, which is quite simply you have an array of investment tools that you can get into. The first is that you can invest into Singapore stocks. That's something I do. That's something that I'll share with you a bit more in future episodes. So do remember to subscribe. This SRS monies on the other hand cannot buy US stocks. The second, if you really love US equities, you can buy funds that are allowed with SRS. There are plenty of options in that space. The third, you can use SRS to buy Singapore savings bonds. Right now, Singapore savings bonds pay about 3.3%. And if you were to think about it, if you were to contribute to SRS and buy Singapore savings bonds, you would be getting less than CPF special account or CPF Medisave guaranteed amounts of 4%, correct? So all things being equal, don't go the route of Singapore savings bonds for SRS. That's also not the only point I'll share. In my recent Georgetown Finance Summit, which I'll leave links below for you to purchase online access, I've actually shared important retirement tips on SRS, how to understand withdrawal windows of SRS, why use cash to buy Singapore savings bonds instead of SRS. These are things I've covered on top of updates on REITs that are in my own portfolio. So if you're keen to listen in, if you're keen to learn, this ticket price for the online access can be easily recovered if you invest properly, or if you invest simply just $10,000 and collect dividends from there. So again, if you're keen, look for links below to purchase your online access, and I'll see you inside. I'd like to show you an important sharing, which is my own SRS portfolio. Fantastic, correct? But again, I'll remove your name so that we don't draw too much attention to what is being bought. I want to show you the process because that is actually more important. This is my own October 2023 statement. You would see the current value is $247,000. I have 4,000 plus still idling that can be deployed. The total amount that I've contributed is $197,625. And I've actually started my journey back in 2010. Looking at this, you may have this curious question. Josh, there's a 50,000 gain. Not too bad, correct? But hey, you've been investing for 13 years already. What is your true rate of return as of right now? Many of you guys have this question. I'd like to show you transparently on my own investment journey. The answer on the internal rate of return right now on this SRS investment portfolio is 3.4%. I've actually done the workings for you to see over here. 3.4% internal rate of return. That's less than CPF special account, right? Do know also, if we were to flash back up this statement, you would realize that my purchasing price for some of the stocks was at $286,000. That means, as of right now, it sits with a paper loss of $40,000. I've seen paper losses before. It's part of the journey. If you make a purchase, Mr. Market may not agree with you immediately. It could take years. I've gone through market cycles to understand at certain periods when it was $286,000, the internal rate of return is way higher. I can actually show you a previous rate of return, December 2021. Back then, the stock purchasing total cost was $248,000 and the total contributions was only $167,000. That meant an 80,000 plus gain already back in 2021, correct? And you would realize that portfolio then was worth more than portfolio now. At this moment, the internal rate of return for this portfolio is 7%. So what it goes to show, internal rate of return depends on the period that you measure, correct? This is as transparent that I can see because for my cash holdings, there's just so much in and out to track on the internal return. And this is where I'll answer the question. Josh, is it possible to do 8% real return? Sometimes you have used that as an optimistic projection. The SRS portfolio clocked 7%, but do know again, I started this journey in 2010. I don't think I was a very good investor back 13, 14 years ago. I was barely a working adult. The amount of mistakes I made, the amount of losses I clocked back then was a hole that I had to go through first before I get to this 7%. Makes sense already? If you invest in equities for long term, it is really possible to get 8%. At certain moments, it looks like there's no daylight. But keep faith, invest properly, know the right investment principles, and with the right process, you will get there. If you like this segment of sharing, again, smash the like button. And with that, I'll move to the rounding points. The first is if you like guaranteed returns, top up Medisave account first, then top up special account. Either of these will give you 4% guaranteed rate of return. On the other hand, if you like investing and if you value the possibility of pulling this cash back, then go for SRS top up. Hopefully, I've settled this debate once and for all. And I have a bonus for you. Since you start me right to the very end, let me show you my year of assessment 2022 and year of assessment 2023. I've actually done a recent radio talk show to share about tax planning ideas from my previous tutorial on how I clocked 90,000 worth of reliefs. What is the difference between these two? I've boxed up for you to see already. One of the key differences is this parent relief. I actually made a slight miscalculation. At the start of 2023, I've decided to give this to a family member of mine. I missed out calculating on that, and I realize now that there are actually still rooms that I can bump the amounts of reliefs up. As always, if you have questions on this front, leave in the comment sections. Check out the Georgetown Finance Summit links below, and check out these previous tutorials that I have. The first is if you want to get maximum tax relief. I actually done 90,000 back year of assessment 2022. If that's all from me, I'll see you in either of these two. Take care as always. Goodbye.